Okay, hello traders. Welcome to the TOGS Trading Podcast. Number five, we're up to, and this is the start of kind of almost like almost you might say like a mini series within the series. That over the next few weeks, we're going to focus each session on one of the four M's of trading, looking at markets, method, money, and myself. But more of that later. Firstly, hopefully, if you can see that, we've got a couple of photos up here at the we've often said that Togs Trading Podcast really started out of me and Ian sort of whiling away a few hours in great Dublin pubs, having a pint of Guinness and a chat about trading and life in general. And then at this last weekend, I was back in Dublin myself and stuff, and so there's a couple of photos there of me and Ian sat in our spiritual home of Kyo's in Dublin there, just having a couple of pints, taking in a bit of the rugby, and just generally sort of putting the world to rights. So there you go. Looking good, Billy Ray. How are you doing, Ian?
Fine altogether. I seem to be over my flu, which is an amazing thing because I had it for 4 weeks or something. So that's a real boon anyway, I can tell you.
Well, clearly it was seeing me and having a couple of pints of Guinness. That's what did it, isn't it? Clearly,
Yeah,
the
yeah.
Dr. Wallace's special medicine.
And they
Um,
far too much hot whiskey
There
altogether.
you go. There you go. I
Yeah.
think actually they do a very nice hot whiskey in Co's. I should have got you one of those at the weekend and stuff rather than Guinness.
I do a nice
But
one
there you
myself.
go. Well, yeah, I bet you do. There you go. So all right, there I have that. So well, listen, I'm pleased to hear that. Pleased to hear that you're feeling better. And listen, it was good to
Mm,
see you at the weekend and stuff. And it's nice to have a
was
pint and a
indeed.
catch up and what have you. And you
Mm,
like, it's always a happy evening in Co's, isn't it?
it is
So
indeed.
so today, all right, as I said, we're talking about the four M's of trading, and today is all about markets. Okay, so what am I meaning by that? Well, I'm talking about it in terms of, I think it's really important for new traders to effectively to understand the markets that they're trading in, namely. Why are they actually trading those markets? Are they actually the best tradable products for the individual? Is it a case of do they really understand that market? Do they really understand how it's formed and what goes on? And then finally, and perhaps most simply, before we lead into looking at methods, is can you actually understand what environment that market is in? Is it trending? Is it ranging, etc. But we will come on to that throughout our conversation. So Ian, when it comes
Mm.
to the markets that you trade, what are they? And how did you come to the conclusion that actually these were the markets that you particularly wanted to trade?
Well, I think it was early exposure was one big thing. So the first traders that I used to meet or used to pal around with were all e-mini traders, and that started me off with that. So that was the start of it. The E-mini particularly suited what I wanted to do. So I knew kind of quickly enough that I wanted to day trade. I didn't want to swing trade. I just didn't do it for me. And the E-mini was suitable for that. Then because I knew other professional traders, I was able to get some sort of help from it. So for help from them, I should say. And just exposure and just to be able to watch them because that's the most useful thing I found was to be able to watch how they, when they made losses, how they reacted to the losses and stuff like that. And I also knew, just as a last point, I wanted to be a trader. I didn't want to be an investor, because I think a lot of traders, people who want to be traders, really want to be investors. And I think it's a different kettle of fish, basically. So that's how I got into the start. But
So that's interesting. So your markets were chosen by kind of the environment that you found yourself in, the kind of the
mm,
peer group that you were around, and that's what kind of channeled your choices, so to speak. So that's kind of interesting. I suppose that's an element of the kind of stories that the lots of people they get drawn to trading a product. Maybe it's FX, maybe it's crypto, maybe it's indices, whatever. Because of actually, yeah, they've seen an advert on YouTube, or they've seen seen one of their mates has been engaged, is trading crypto, and they thought, I want a piece of that and stuff. And so, it's about, that might be what gets people into trading, but it's about trying to understand whether that is really, the best markets that you're available to trade.
Mhm.
So, um, I will operate across a broad range, all right, a broad range of instruments, but primarily it's mostly FX indices and commodities. And even with that, it's more FX, okay, on the terms of intraday and swing, and even within FX, it's mostly sterling products, okay. So there's the kind of subsets within subsets, okay, that I particularly like to focus on myself, what have you. But I often see people who are trading instruments, and I do ask them, well, why have you chosen to trade that market? And they've chosen to trade that market because they're like, well, I saw it's the one that moves the most. It's the fastest moving market. So I thought that was the quickest way for me to basically engage with markets and build my capital.
Mm.
And lo and behold, it's probably not going very well for them and stuff, because they're making the decisions based upon chasing outcomes rather than a good understanding of what's required as a trader, isn't it? So you
Mm.
start that journey, and then you've stayed with that. You've stayed solely with that instrument, or
Pretty much,
have
no.
you?
I've done some time with. One of the other things I wanted to say as well is that just at the time when I started off, where technology was at that particular time for trading from home, the American stock market was miles ahead of anything you could do with the UK stock market, DAX. Anything in Europe was and still is probably actually is a little bit. The Americans were further ahead basically. So if you went out to get you were using TradeStation, I use TradeStation now. Things like that were available to trade US markets that they weren't available to trade to
Yeah,
chart in the same complex way you could chart with them. The thing you were saying there, yeah, an awful lot of people are in a rush um, to learn to trade. Basically, they want to get something out of trading, and they just end up in this big, huge, mad rush. And the first thing when I always look at a market is I tend to try and look at the market from how it uh, agrees with my setups, because that's what you're trading is your setups. And so some markets don't agree with them that well. I found over the years, I used to trade CL oil, crude oil, quite a lot. And I found that over the years that it changed a little bit and it doesn't tend to respect my setups as well. And I find the way that it moves a little bit more difficult. In fact, I went in and did a CL trade yesterday and had a loser, which is unusual, where I went straight into ES and carried on regardless. So I think an awful lot of it is simply just looking at how a market relates to your setup and the type of trading you want to do when you're selecting
yeah.
one.
And that's an interesting point. So you looked at trading oil, okay? An instrument that is not I would say not necessarily complementary to trading indices, okay? So there's differentiators there between it, but then you realise that perhaps what it wasn't what suited you in terms of your particular style of trade.
Yeah, it likes bigger. Basically, CL tends to like bigger setups. That's what I found with it over the while. Where when I was trading at first, which is probably 5 years ago now, I traded it for a year, 18 months, almost exclusively. And I found that on smaller setups that I tend to like to trade, it used to run really quite well. And now I tend to find that it's almost more of a swing trading vehicle, really, to be quite honest with you. It's changed into liking sort of bigger setups. The only problem with it is I find is that it's quite volatile, as in it likes to go up a lot and then it likes to come down a lot. And it's very hard. I find it very hard to sit through those swings. And which is what you would have to do if you were trading CL now in the way that I would see that you'd have to trade CL. And where ES is just, it's the same setups every day. ES is a range. I find it ranges a lot. So you have the top of the range, you have the middle of the range, and you have the bottom of the range, and that's what you're basically looking for. So you're just sitting there in the morning waiting to see where you are, and then sitting to see how long until you get a top, middle, or bottom of a range test, and then just trade that. It's not. And then there are different things that they like. ES doesn't like. It likes support and resistance actually quite a lot, but it doesn't like things like channel breakouts. It's really not great with channel breakouts for some strange reason. It likes Fibonacci quite a lot. Trend lines can be a little bit dodgy with it sometimes. Depends on the size of the trend line. I find the middle-sized ones, basically, that you draw on a 60-minute chart can be a little bit abused sometimes, but I find that if you go down to like a 1-minute chart, that can be, because there's no room for them to play. Nobody's making any money out of screwing around with a 1-minute trend line. So that was basically it. And then also on top of that, you just get used to trading it. You get to know the personality of the market that you're working in. You know when it feels sick, and you know when it feels happy, and you know when it feels powerful, and when it feels weak, and that's the advantage, I think, of trading one particular instrument.
Yeah, no, that's good, and you're absolutely right. That kind of focus does bring you a bit of a connection, right? A connection to that, what might be that particular instrument or that particular asset class, and that can be enormously beneficial. And it's kind of it's sometimes hard to quantify, but you will know when you've done enough of it that you will get a feeling, a connection, and also you will know when that connection is broken. You take a couple of weeks away from it, you will realize that basically you are not as in alignment with that market, okay, and that it takes time. That's maybe that comes into back into that continuous tale about having a process. Part of that process, my belief, all right, but rightly or wrongly, is part of the reason you follow processes is that it's actually by doing those elements and getting focused on that is what actually gives you the best opportunity to enter a flow state. That would be my view. Others may differ, but part of that is also not only the flow state, but actually having a connection to the market. And if like you focus on one particular instrument, you can get enormously connected to that, and you enormously get great sense of understanding of what's happening in that particular market, which it should not be. What's the word? It should not be underestimated. It can be enormously helpful. I think for most people, it can be enormously helpful if you understand that actually this isn't a day to trade that market. Actually, it's a day not to basically to collapse your sort of risk exposure, where you either trade very, very small or not at all, because you're connection and you just look at that market and think, well, hang on a minute, I've no idea what's going on here today, and people think that after all these years of trading that you can just immediately flip open the chart, look at the chart, and you're connected. And that's not the case. There are times and days I will look at charts and stuff, and I have absolutely no idea what's going on here. No idea what. It just does not make sense to me in any way, shape, or form. And do you know what I do on those days? I do absolutely nothing. I do absolutely nothing. I'm very happy to sit on my hands, because there's nothing worse than taking trade in a moment where you have no understanding of the environment or the context, and those trades don't work out. And yourself, I shouldn't have engaged there. I shouldn't have traded there. That was, I was asking to get a kick in the face, and that's precisely what I got. And I don't kicked in the face. Do you know what I mean? Strangely enough, I'd actually kind of like to avoid that where and when you can and stuff, isn't it? So yeah, that connection to markets is enormously beneficial, isn't it?
Oh, it is absolutely. It's one of my biggest weaknesses, actually, is kicking myself in the face. I think, because one of the things I tend to do is I tend to trade when I'm not. I shouldn't be trading. Yesterday, to be honest with you, I shouldn't have traded. I took Monday off because it's a bank holiday in Ireland,
Yep.
and I had a sick son at home. He had the flu again, and so
Oh, well,
I went in and I sort of forced myself into trading yesterday, and I just ended up kicking myself, and it ended up not being a great day where it should have been easy enough, basically. I was
yeah,
just you just mentioned the flow state. Like, the flow state is, there's two things I always think with the flow state. One is that it's an amazing state to be in, because when you're properly
yeah,
connected to the market, there is nothing you can do that isn't right. As in, because you understand, and I think the flow state really is just understanding context. You understand the context in what you're seeing everything happen. So you understand that the price is going from A to B. So it's trending from A to B, and you feel this, almost connection with it. And then it's such an easy, it's fun and it's lovely and it's great. It's quite hard to enter. It takes quite a bit of time to enter, and you don't tend to spend a huge amount of time in the flow state. But then you don't need to either, because the thing is that particularly with day trading, you only need to make that one or two trades in the day anyway. And um, and even when you're wrong, like one of the great things about the flow state, because people are always fear being wrong, but when you're actually in the flow state properly in trading, you're almost joyous to be wrong because you've got that information. You've done something. The market has gone, oh no, you can't do it, and you don't react to it in any kind of a bad way. You just react to it as in an ah, and you've got a new piece of information that you can trade, which is great. You know that the like one of the things I know how I would know that the market is weak is that if you have a very small range and it can't make it to the other side of the range before it starts going back. And when you're in the flow state, you'd realize you could be in a long and you're just about to get stopped out. But in the flow state, you're not worried about that. You're just going, that's after. So the market's really weak. We better get ready now for shorts or whatever. Like, it doesn't, it takes all the threat out of it. There's no threat when you're properly in the flow state.
I
It's
agree. And
yeah,
it's a lovely place to be, isn't it? It is a lovely place to be. And
yeah.
you're never in it as often or as long as you'd like. And I know for myself, I've been very fortunate. This is a bit of a segue, but it is
Mm,
linked to it. I've been very fortunate. I know I have had periods of my life where I have been in a flow state, trading, playing sport, driving cars, in presentations, in controlling dogfights, flying aircraft and stuff. I've
mm,
experienced it in every sphere of my life, and it is very good. And the kind of the one thing I would say is that the frustrating thing about it is a case of as soon as you recognize you are in flow state, you come out of it. I don't know, like in a match, you're playing really well, and you're like, yeah, God, I'm really at it today. I'm really playing. And the moment you realize that, it kind of almost that brings you out of it, and then it's the process that gives you the chance to return. It becomes about what do I need to do to give myself the best chance of returning to a flow state. There's no guarantee of it, and that's where process comes in. That's where I find where process just focusing on doing the process well. That is what basically detaches me from all those kind of let's say those fear, greed, hope, other kind of let's say biases, etc. That we're all a thing because I'm just literally engaged in the moment. So the opportunity to do that, I can well believe, especially as an intraday trader, having experienced it, is that when you're focused on one particular market, you can start to shape your process to help you with that. Um,
yeah.
so,
No,
go on if you're going to say, yeah, go on.
oh, sorry, because I thought you were finished there. Sorry, no, the reason I think you get pulled out of this flow state is that there's a certain amount of fear or something that's built into it because it's like a change of, like I found when I was going into the flow state first, it's like a change of identity to a certain extent because you're super. You're in this thing, you're doing what you want to do. You're doing it at the highest possible level that you can possibly do it. And you're doing it at a level that's generally higher than people that are around you for those moments that you're in that flow state. And I think in some ways it can lead to a certain level of anxiety for a lot of people when you get into the flow state first, because it's sort of, it depends on how you see yourself. And it can be so all encompassing, when you get into this flow state, that's like that I've seen when I've been talking to people, that it causes them a certain amount of anxiousness. And it's the anxiousness that actually takes them out of the flow state where there are two things that are going on for them. One is that they're achieving more than they believe they should achieve at some deep part of their subconscious. And the second thing is that it feels like it's such an immersive state that once you're conscious that you're in that immersive state, it almost feels a little bit scary, I think. And the last way to get into the flow state, which is that you have to have a certain level of skill so that you're not fighting with the market or what you're trying to do. You're not trying to
Over it, yeah.
make it up or whatever. You have an awful lot of the work is pre-done, and so that allows you then to spend time trying to get into a flow state, which is basically if you could switch on a flow state willy-nilly and just trade 2 hours a day, you do whatever the hell you like in your life. Really, it's it's so brilliant, and it happens in other things too. I mean, it's an
Yeah.
amazing thing. I remember being in a fight once, and it was like, you nearly felt
Oh,
like being in the Matrix. I was in a fight with two guys one day, but I just was absolutely in tune with what was happening around me, and it was
yeah.
it was it was simple. It was absolutely simple, and socially it can really kick in as well sometimes. If you're out laughing or you're out having fun or something with people or you're out chatting to people, you can get into a flow state doing that quite almost unconsciously, I think, which isn't as
Interesting.
yeah.
You mentioning flow state and being in a fight. This is, taking a different direction, but it is actually linked to your ability to trade. So there's a great movie I like. It's actually a Tom Cruise movie, The Last Samurai, which
Oh,
is if you've not seen it and stuff, it's a great movie. Whether you love or loathe Tom Cruise, it is a great movie. But actually, it talks about him as he basically learns to become a samurai, and he basically the processes that he goes through, right, that samurai goes through every day. And invariably, what happens is that actually it clicks when he's ambushed by a couple of lads, and actually he enters a flow state because he's been practicing these things until the response becomes automatic. It clicks into flow, and of course, he does very well in the fight because it's Tom Cruise, isn't it? But I remember watching it. That movie's, I don't know, 15 odd years old and stuff. And it was, I found that fascinating because I've been reading a book about, well, I think I've been reading the Five Rings anyway, which is the great book about the samurai. But they talk about that, and it just reinforced that element of this is why we come back to having processes, right? Because you followed it by doing it. That is what actually gives you the best opportunity to enter a state of flow in your trading, which is what is the thing we're all looking to achieve and stuff. And you can get better at it the more you practice at it and stuff. So yeah, there you go. That's an interesting segue and an interesting insight.
I
And I
just do
think
one
I
last
hope you won that fight, Ian. I'd be disappointed if you didn't. I hope you led the two lads.
Oh, I did absolutely, yeah. Because I was thinking about this three times I've been in when I was doing martial arts. I was quite into when I was a young guy, and I got into a school fight, 16, 15, 16 years old, and some guy slapped me across the face, and I just saw red. But it was really just this, like I was quite, but I knew exactly what I was doing. It's like, oh, it slows down. It's like doing everything in slow motion.
Yeah, yeah,
So it
yeah.
is, and I found that was that's you were thinking ahead. You were thinking faster than what you were doing, and you were just doing what whatever came to mind, and that was it. It
So,
was
well, at
different.
least I'm pleased
Yeah,
to those lads got a good
yeah,
shoeing and stuff from whatever. That's
yeah. It
grand.
was one of those things. I went to
And
school where there was lots of farmers who just like that's how they sorted out their day. So,
that's how you sort your differences. Yeah.
your silage is not as good as my silage. Or
Yeah,
so.
there you go. Um, so listen, when we talk about markets, right? So we've just talked there about how people come to markets in the sense of it is drifting through very often their peer group and their first experience with trading, and the challenge is that it's about understanding. Do people really know and understand that market? And what I mean by that is that there is the understanding of context. So, for example, we're here in European time, and invariably a lot of our trading is done in the kind of the London session. And so, I once chatted with a lad who was struggling because he was trying to trade. He was trying to trade basically Aussie yen in the London session, and he wasn't having much. He wasn't having a great deal of joy from it. And I was trying to understand, well, hang on a minute. Why are you trading, Aussie yen, two Pacific currencies during the London session? And of course, it turned out that his mate had started trading Aussie yen, and that's so he thought he should trade Aussie yen. And I was like, well, why did your mate start trading Aussie yen? I was like, oh well, he works in a bank in Singapore, and so that's what he does. And I was like, well, Peshke, you answer that. He's working in a bank. B, he's in Singapore. He's in Pacific time. And so actually he's trading the right instrument in the right time. So now I'm not saying you can't do that. I'm not saying there aren't opportunities, but you have to kind of have an understanding, a kind of a meld, an alignment between the kind of the time zone you're trading and and the instrument you're looking to focus on. It's in the same ways that you didn't, let's say you'd intraday trade euro sterling, okay, in the early morning of the London session, as dull as that can sometimes be. You see people trying to trade it intraday at like midnight, okay, into the Asian session, and you'd be like, why are you doing that? The majority of the protagonists in Euro Sterling, that they're in the pub or they're in the bed or they're in the mistress's bed, whatever that is and stuff. So there is an element of you do need to understand the market you engage, and you need to understand the context within which to engage it, wouldn't you?
Oh yeah, no, absolutely. I mean, depends. Like what you trade depends where you are. I mean, we're kind of blessed where we are because the time zones were between, the well, I mean, you have the London Open. I always think, but it was the German one, the DAX, and you have that, and then you're still on time for the US, basically. So
Yeah,
it's a lovely time zone to be in. I think it also depends as well what sort of how much cash you have.
yeah,
There's no sense in trying to day trade if you don't have enough cash to sort of back you up. Like basically, if something goes wrong, I think that and especially if you're in the US, like where you've that $25,000 requirement.
yeah,
Um, I see a lot of traders as well pick markets that they want to trade, particularly day traders, because that's what I'd come across more often, where they're trying to trade news events to overcome a lack of skill sometimes. So they're sitting there, they're waiting for CPI to come out or for some news event to come out or something to come out that'll create the volatility. And what they're really hoping is that they'll be able to grab some of that volatility. And that sometimes some traders are great at it, but they're highly skilled traders. And a lot of newer traders, I get the impression are doing it trying to bypass having to learn how to trade first. Um, sort of a shortcut. And then the last thing I remember being at a party 5 years ago, maybe or something like that, and I was by far the oldest person at the party. And there's all these sort of techie guys, 27, 32, something like that. And they're all sitting around having a conversation about Bitcoin. And what it was a bunch of guys spurring each other on to hold Bitcoin and to buy more Bitcoin. And there was no sort of there was no critical analysis of it. There was no, it would have been very hard because if you owned Bitcoin and you were in that whole Bitcoin and you sold your Bitcoin because you felt that you should or whatever the reason for, you would then have to go back and almost justify to your friends why you're not holding 2 Bitcoin or 3 Bitcoin or whatever the thing was at the moment. And I think that there was, and then not having Bitcoin, the guys who didn't have Bitcoin they were out of the gang, a little bit, and they were kind of seen as being a little bit silly for not being in Bitcoin, where these were all these guys were sure they were spending the money in their head before they'd made it. And it's the same thing I saw during the property boom, like when property was going bananas and everybody was leveraging, and anybody who didn't have their thumb in the property boom somehow was stupid.
yeah.
So I think that there's a lot of peer pressure sometimes that goes into what you what you end up trading.
Exactly. And yeah, and trading because of peer pressure is not really a smart way to operate. It might get you into
No.
the game, but you really need to quickly understand yourself, really. You need to understand yourself, which is, the fourth M of managing myself, which is about understanding, your own kind of risk tolerances, your own risk awareness. Okay, your capitalization, which is the third M of managing money, about understanding, if you're what can you actually trade based upon your present capitalization. The brutal truth is that most private retail traders are undercapitalized for the goals and objectives that they set themselves. So it is about having a little bit of a little bit of honesty, okay, a little bit of burst the bubble and actually just embrace the reality of the situation and work with that. And so if you're trading, yeah, if you're trading particular instruments that have, let's say huge capital or maybe margin requirements, well, then it's like trading with a noose around your neck. There's you're struggling as it is, okay, and actually spending a bit of time understanding different asset classes, understanding different instruments, and understanding a their capital requirements, but also b the way they move. Lots of intraday traders are chasing volatility, but that might be the worst instrument for you to trade you individually because that just might not be necessarily your style, your way of operating.
Mm-hmm.
And actually, it is that kind of like it's that kind of like Goldilocks, like the Goldilocks of trading. Okay, you're looking for markets that are not too hot for you or neither too cold, the ones that are just right for you. And the sad thing is, you can do a lot of research, and you're going to have to, and there will also a little bit a bit of trial and refinement. That's understanding, but the kind of message I want to get across is that you don't just need to trade the one that you made trades. Okay, it might start you off, but there are some fantastic trading instruments out there across the whole spectrum, and actually finding the one for you. That time and energy spent on finding the right assets for you is money and time and energy well spent, rather than sort of chasing a dream on an instrument that just your probabilities of success are being reduced constantly. So yeah, so you talked about the Bitcoin bros and stuff and what have you. I mean, there's an awful lot of people who basically, I wouldn't necessarily even say they traded crypto. They just bought some crypto, okay, and were in the right place at the right time for that particular market and have done well out of it. Some of them, not everybody, and then it just fills them with a false sense of ability and confidence, right? When in fact, they didn't really understand that market. They were just in the right place at the right time, and that one that they esoteric one they it pumped and they were able to get out of it. Okay, and there's an awful lot of people who are on the other side of that. Okay, and I wouldn't necessarily call that particular trading. That's just recognizing you were lucky. Okay, and when Lady Luck shines on you, that's a wonderful experience. But I'm always very quick to sort of doff my cap to Lady Luck and say thank you, and then realize it for what it is, and particularly move on. And so there was I didn't see them much in the Northwest, but Dublin was full of those kind of crypto bros a few years back, wasn't it?
Oh, it was, yeah. But I mean, it's the type of industries that are, an awful lot of tech startups and stuff like that. And so
Yeah,
what you end up
yeah,
with those tech startup guys is that they are basically they in themselves, a lot of them are effectively taking a trade, as in that they go and they get a job in some company, they get share options, and if the company does well, they'll end up rich as creases, and if the company doesn't do well, they still get paid relatively well. But a lot of them are hoping to be in the next Apple
yeah,
when before it really does anything. The things I always found the most important picking a market was the liquidity.
yep,
Although
yep,
it's not smart betting and stuff, liquidity isn't quite as important, but it still is a big thing. How it acts technically with your setups or your particular type of technical analysis. Like, a lot of people, like I use all the different types of technical analysis almost nearly at this stage. Like but I like Fibonacci is the one that I would set. How I would set whether something is trending or not trending is totally Fibonacci. So if it doesn't like fibs, it's untradeable to me. I can't do anything with it. And then volatility. If you've got liquidity, volatility isn't, in my opinion, necessarily the most important thing or the best thing in the world if you've huge volatility. So you could go into the ES and you can get a small trade for 4 points, but you could load up the bus with contracts if you wanted to, if it's during the cash session, and expect not to get huge slippage or anything with that. So liquidity is a big sort of thing, and you don't need that much volatility. And then knowing when you're wrong sometimes with volatility, like every instrument is different with this volatility a little bit. It's part of its personality. And the volatility is either going to tell you that you're right or you're wrong. And it's knowing when you're wrong with different instruments is probably one of the biggest things that you're looking at, because if you look at oil will move much further before it actually means anything, where the ES won't move very far, but it means something. It's a decision that they're making. And and um, and that's what I find is a big deal when you're moving from one instrument to another instrument to a third instrument, is that the volatility is going to tell you how much volatility do you need, how much does the price have to move to tell you that you're wrong, because
yep.
that's going to determine your stop loss, and your stop loss is going to determine your profit. What type of trades that you're going to take, what type of setups you're going to use in that market, what size of setup you're going to use in that market, all those kinds of things, basically, I think.
Yeah, yeah, those are all excellent. But actually the kind of one point I would say is, you are right in terms of the liquidity of the market you're operating. But I would actually also say is that you also want to understand, if you are, let's say, spread betting, you also want to understand the liquidity of your spread betting provider, because they may not have deep liquidity in themselves in terms of what they can offer you. And it kind of, it used to be with the big boys and stuff that you would run out of liquidity around about £20 a point. Okay, beneath that you were fine, no bothers getting in out. But once you start getting above £20 a point and stuff, in terms of liquidity, so it has a knock-on effect in terms of slippage, or even if not getting entered. Okay, and I had an issue with one or two, well, two of them, but trying to get bigger sizes on, and just basically they just refuse to take the trades and stuff and what have you. So there is liquidity in the market, but there is also, especially if you're going to spread bet, because it's just a reflection of the market, you're not actually trading their market. It is something you have to consider, that the liquidity of your provider, do they actually have the ability to basically fill you at size? And uh, they'll all say they do. They'll all say they do. All right, no one's going to tell you no, we can't. They all tell you they do, but then the proof's in the pudding. When you're trying to get that position on and stuff and what have you. So yeah, so understanding that liquidity and stuff is unbelievably important. And kind of simply what well, that's wrong. What I believe is simple, all right, but I appreciate if you're a new trader that might be different. Is that I would expect new traders to be able to understand what environment that market is in. Quite simply, is it trending? Is it consolidating? Or is it in a period of transition between the other? Okay, just even at a simple level, those kind of three things. Can you tell? Can you analyze that market? Whether, however you particularly wish to use, or whatever particular skills or talents or tools you do, but you should be able to understand: is that market trending? Is that market consolidating? Or is that market maybe in a transition period? Because if you can't, well, then you're starting from I would say you're starting from a place of false assumption. And I say this in next week we'll talk about methods, but you could have the best trend following method in the world, but if the market you're trading is range bound, it doesn't really matter. You are likely to have a suboptimal outcome from your trading endeavors. And so being able to understand the market environment that this instrument's in, and whether it aligns and melds with your method, is crucial. I would suggest, absolutely crucial. And yet lots of people don't understand that. They don't get that. Okay, they just think, oh, I've either been given or I've bought this, let's say, trend follow method, and I'm just going to trade it on this instrument, all right, until the cows come home. And then when it doesn't work for them, they throw their hands up in exasperation, saying, oh, well, trading's rubbish, it doesn't work, blah, 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 blah. But actually, they just did not understand how you need to understand the market and the method, and find that they're in alignment.
Mm. Just with spread betters, I've had so many problems with spread betters over the years. They're just special people. I have a slightly different, anyway, with the markets, I have a slightly different take on the whole thing, because to me, markets are always ranging, because all my setups have to do with the ranging. So a big, like a trend is just a big range, as far as I'm concerned. Because everything basically starts off with a hold of support. Some supports hold someplace. And then it has to go to, you have to find someplace that price wants to go to. So that's generally the top of a range, the top of something else. So there's usually something else up there. It's most of the time it's in, if you have a long fib and your price holds the long fib, you can draw a fib in the opposite direction, and you have where price is probably going off to. And that then becomes a range. So you can do that on a daily, or you can do that on a 5-minute chart. It doesn't make much difference. One well, I won't explain the whole thing to it now because it's actually too complex. But generally, I would always find in all markets, prices going from one side of a range to another side of a range. And where the difference is, or where a trend would even be, would be that it would break through the top of the range. And then the pullback then starts off a new range, and then we're off again to the next thing. So I always look, it's kind of like Darvis boxes in some ways, the way that I would tend to understand the market. And consequently, I would have a good idea where, like, I'd always start my day with, this is where it held support. So now it's held support. It's going to it usually goes to the middle of the range. Sometimes that range is quite small. Sometimes that range, something we say 20 points is not an unusual size of a range or 40 points would not be an unusual size of a range in the ES. And so your first one, you know that it's going from support to probably the middle. It's probably going, it'll make a decision there in the middle whether it's going to turn back or go through. And then you're looking for a move up to the top part of the range. But I always look at it as a ranging market. So I don't tend to look at so the only time I'm really affected by chop, if it's on that sort of 5 minute chop, that just, price isn't going anywhere. And even that's just a small range. That's just a tiny, tiny little range. It's just too small to trade because you can only, like I'd have to trade, ideally all my trades should have a 10 point target at least. But I mean, in reality, you end up taking 5, 6, 7s a lot of the time. Anything smaller than that, or if it's just a 5 or 6, 7 range that is just bouncing between it, that's just playing with fire because the profit isn't in it to justify taking the trade. So if you get stopped out, it just gets expensive. So
Yep.
That's the only time that I would that I would worry too much about chop or sort of low volatility or whatever. So yeah, that's just my own personal take on.
Well, you can tell you're a scalper, Ian. All right, you can tell you're a scalper. The kind of, and that,
Yeah.
and that's why. Well, yeah, if you're operating in like 10, 20, 40 point ranges, then yeah, everything is a bit of a range and stuff.
Mhm.
Whereas I'd be looking at, for example, you look at yen for like the first 9, 10 months of last year. Okay, especially against things like
Mhm.
dollar, Swiss, etc. That those were beauties of trends. All right, those were beauties of trends. The and that's what I try and tell people is that the start of the year, I know certainly within FX markets, I know there will be 3 to 6 major trends, what I would determine super trends, which may last for anywhere between 2 to 9 months. The problem I have is I don't know when they'll show up and I don't know where they'll show up. Lots of people might say they do, but I generally think you don't, and you have to, and that's why you have to that's why you have to do your process every weekend to just basically analyze markets so that you get an understanding of when those proper trends, start um, basically start to see them, and then basically they leave the station. Okay, they take off. All right, but the thing I try and tell new traders is that markets will only trend 20 to 30% of the time. So as a scalper, as an intraday trader, for me, as an intraday trader, I tend to be a reversal trader, tend to be a mean reversion trader because it is all much smaller, much, much smaller. Whereas on those kind of big pictures, especially like, sort of daily, weekly charts, you can get a trend that might run, as I say, anywhere between 2 months to 9 months, depending on the fundamentals and the sentiment, the geopolitical events and stuff and what have you. The challenge you've got is you don't really know when and where they're gonna turn up. But and I bang on about this constantly to new traders. A good trend leaps off the chart at you. All right, good trend leaps off the chart at you. You shouldn't be forcing it. If you are forcing it, that in itself is telling you that this ain't a trend, right? This ain't a trend. Good trends leap off the chart here. The challenge you have is that, especially in the longer term, is that they don't happen as often as we would as often as we would like. That's the long and the short of it. All right. Anyway, but even if you look at like the index guys, who's what over October 22nd, the latter part of October, and then that kind of run, which has continued into those major American indices. That was just, they were just, amazing trends. Right. I wasn't expecting. I thought after kind of a September, October, we might actually drift a bit lower, but boom, off we went, and it was a case of, a good trader should be able to recognize that is a trend, and then which leads on to next week. Well, what's the method you use to basically to surf that trend? That's the way I like to look at it. That actually you're looking to surf the biggest waves, and that's my how would I describe it? That's my FOP to to basically managing my inner warrior self who basically wants to constantly fight battles and fight wars, and that's actually not necessarily the best mentality to bring to trading. Think of it more as like a surfer, as in you're working with the ocean. Let the ocean do the heavy lifting, as opposed to basically trying to fight everything. Because unless it's you picking fights with fellas and stuff, for the most part, fighting is an energy intensive endeavor, whichever way you do it and stuff. But anyway, that's a different conversation for a different day, I think, isn't it?
Yeah, I was just thinking about that because I track some shares just for fun, like Tesla, Boeing recently enough,
Yeah.
just because it came up so often. And I still find even on daily charts that it basically is big ranges. Because I find the price travels from fib to fib. So it starts at one fib and it goes to the other fib. And it doesn't matter as much. It doesn't matter as much. Like I wouldn't think of it then again as trends as such. It's just that you can break it down into these small little boxes, these little fib boxes. And I find that that tends to be the way that I would understand quite a lot of these, and this is the way that I would if I had to go swing trading, that's absolutely the way I would go swing trading. And I found the only problem I found with it is that if I went back 10 years, that used to work really super well. Sometimes they're a little bit dirtier than they used to be. But generally I find things like what are highly volatile shares, in my opinion anyway, Tesla would be quite a hard one to trade.
Yeah.
They tend to start at the top of the range, and then they will move down to the range, to the middle of the range, and then they'll move down eventually to the bottom of the range. So that's where I would expect price to be going. And I think once you have a target, because one of the big things with intraday trading is that you have to have an idea where price is actually going.
Yeah.
You're not taking, a lot of people think, you're going and you're finding these bull flags and then you're trading this bull flag. But the thing is that knowing the price has held this area and it probably is going to test that area means that now you have a context, and everything that happens within that context either supports you entering into the trade or it doesn't. So there's no sense in taking a bull flag that has stopped short of support. If prices come down, bounce a little bit, and then you have this little bull flag, but it still has, several points to go down to support. Like, I mean, what's there's nothing to hold it. So you're building on sand, like, so it's, I find that gives me the context that I need to trade whatever I see price actually doing in the middle of it. And that's the two biggest pieces of information that I have to start off with every morning is I have to know what did it hold, where's the middle, where's the top, and then just trade away for that, basically. Fact.
Well, I think that's probably a good place for us to sort of draw to a close
Mm.
and stuff. Time flies when you're having fun and all that. So, yeah. So, really, we talked about markets today and about how I really, you want to understand your market, okay? And all right, you might have come to trading a particular market because your mates or your peers who are doing it, okay? But that doesn't necessarily mean you have to stick with that. If that works for you, great. But if it doesn't, there are plenty of other assets out there that you can look to trade, and you probably should do a little bit of research to understand which are the ones that tend to sort of suit your personality better. In the same way, instruments have a personality, so do you, and it's about trying to find ones that where there is a kind of a meld or an alignment with that. There's also about understanding the capitalization requirements for the particular instruments. Some of them, really do require, pretty hefty capital requirements, and that just might not necessarily be a smart move for you at the start of your trading career. We also want to understand, the liquidity, don't you? Okay, in terms of, the liquidity of that particular instrument, if you're going to be trading at size, but also the vehicle in terms of the broker that you're using, whether it's going to be, whether you're trading direct access or a spread bet or etc., what have you. And then also about understanding the market itself. All right, is that market range bound, okay, or is it trending? or is it, in a transition period? Okay, especially on big charts, you might see, you get see it might transition over months before it kind of, moves from like a trend to a range, and from a range to a trend. And actually being able to understand that is creative. It's part of that picture you say of understanding the context. And if you have a context, well, then you're at the starting point, aren't you? Being able to find your pattern, being able to find your trigger, and you're good to go. So yeah, any final points there from yourself, Ian? Have I missed anything there
Nothing I
at
can think
all?
of off the top of my head. Boom, boom, boom. No, everything else I think I've pretty much covered. I'll still do it next week.
Yeah, yeah. Well, that's it. I mean, next week, ladies and gentlemen, we'll be on methods. The second of the four M's. Okay, talking about, are you trading the right method for you, and what is the right method? Because literally the scope and the scale is massive. So there'll be plenty for us to chat about there. So until next week, Ian. Thanks for turning up, and thanks for the pint on Saturday night. Very good of you and stuff. Very enjoyable. Three
Yeah.
pints of Guinness. That's good. That's just nice and stuff. And yeah, I will see you all next week. And listen, thanks for everybody for watching and listen, subscribe. Let us know if there's comments or feedbacks or points you want. Please, we're very happy and glad to take that feedback. And until such time, trade well, everybody. Cheers.